Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. Today we are going to take a look at another one out of the industrial sector, Texas Instrument. It is September 7th, last video of the week. We do these Monday through Thursday, the Stock Pick of the Day series. And if you are a dividend growth investor and you are into this type of content, looking for value in the market, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this one that we are watching or purchasing and adding to our portfolio, and overall just sharing our experiences. Let's jump right in and take a look at Texas Instrument here. So if you want to know more about this company, check them out at www.ti.com. That is where I pulled this information from. Texas Instrument, we design, manufacture, test, and sell analog embedded semiconductors that help you create differentiated applications in markets that include industrial, automotive, personal electronics, communications equipment, and enterprise systems. Our broad portfolio of over 80,000 parts helps you efficiently manage power, accurately sense and transmit data, and provide the core control or processing in your electronic systems. They have their hands in amplifiers, audio equipment, clocks and timing equipment, DLP products, data converters, die and wafer services, interfaced services, isolation communications, logic and voltage translation, microcontrollers, MCUs and processors, motor drivers, power management systems, RF, radio frequency and microwave communications, sensors, switches, and multiplexes, wireless connectivity. And for those of you who may be from the 70s, 80s, and 90s, like I am, born in 1979 and grew up in the 80s and 90s, you may remember, and Texas Instrument may have been the provider of one of your first calculators. I don't know if you, any of you are out there around my age that remember your first graphing calculator. Mine was a Texas Instrument graphing calculator, right? Now I think everyone can just open their phone and get the calculators that they need. But back in the day, you had to buy a separate one. And again, I'm dating myself a little bit. Back before everyone was running around with cell phones in their pockets, maybe there were some of you out there with pagers. That was the thing back in my day. I did not have a pager, and I did not get my first cell phone until I was in the military, almost in my 20s. In early 2000s, they just weren't a thing whenever I was growing up. But now, again, everyone has them in their pocket. You've got more technology in your cell phone than they had whenever they launched the first rockets into space. So probably not as big in the calculator section, but they do have their hands in a lot of electronic equipment, MCUs and semiconductors specifically. Let's keep on going here. Now, the reason we are taking a look at them, down 1.99% on the day, we are talking about Texas Instrument Incorporated, ticker TXN, out of the industrial sector, closed the day at $164.71. 52-week range as low as $145.97, as high as $188.12. They are kind of floating in the middle between their 52-week low and 52-week high here. Average volume 5.0 million. Today's was 5.1. A bit of a sell-off pretty much all day. Looks like they tried to recover in the noon hour and then right back to a sell-off. Market cap of $149.551 billion. A beta of 1, so they are just right in line with the market, right? The same volatility as the market overall. Price to earnings ratio, PE on this one is a little elevated, 19.8, $19.80. I'd like to see this back into the $15 range or 15 range, probably closer to this 145 here. So I'd like a little bit more of a pullback on this one, but it's headed in the right direction for me. Anyway, earnings date October 23rd. I'm sorry, earnings per share, EPS is $8.32 per share. Nice EPS here on this one. Earnings date October 23rd through October 27th. It's going to fall somewhere in that range. Forward dividend is $4.96 paid out in the year. They are quarterly payer, so divide by 4 or just wait a little bit and we'll see their quarterly payouts here in a little bit. And nice dividend yield on this one, 2.92%. Ex-dividend date is July 28th. We're past that. It looks like they paid out on August 15th. So you would be in line for the next dividend if you were to buy them now. They actually should have an ex-dividend date coming up here. So this should be updated here. 1 year target estimate, $183.94. So they see it not quite getting back to its 52-week high, but pretty close, at least according to Yahoo Finance, where I pulled this information. I am not affiliated with Yahoo Finance, just one of the sources that I like to go to for information, and I always recommend more than one source for your information so you can back check the information you are getting is accurate. Now, I like to go in and look under statistics to see dividend yield theory. To do that, we click on statistics, go to Yahoo Finance, click on statistics, go down to dividends and splits. You look at their 5-year average dividend yield of 2.57. You compare it to their current 2.92, or over here, forward annual dividend yield, same number, 2.92%. And if it is higher, like it is, that speaks to some undervaluation on this one. So at least according to dividend yield theory, this one is potentially undervalued. It even offers a little bit of a buffer here, a margin of safety, so to speak, though I would, like I said, like it to pull back closer to this 52-week low. Under 150, I'd probably be interested in this one, though it's getting pretty close. Like I said, they have a low payout ratio, 58.46. I like 75% or less, so this definitely meets the criteria I'm looking for. Now, you also want to get into the financials of the company, look at their revenue, look at their debt, look at their assets over liabilities. You can check out their balance sheet, their income statement under here. One of the things we want to look at as dividend growth investors is free cash flow. We want growing free cash flow because dividends are paid out of free cash flow, so we want growing dividends, and that comes from growing free cash flow. 2019, $5.8 billion. 2020, a bit of a drop to 5.4. Back up in 2021 to 6.2 billion, and 2022 dropped back down to 5.9 billion. Now, overall, there is slight growth from 2019 to 2022, but what you want to also look at is, again, that's why I include this one a lot of the times, the repurchase of capital stock. They are consistently buying back their own shares. So even though it looks like they went down in 2022 from 2021, they bought back a significantly higher amount of their own shares in 2022 as well. So that can account for that drop in their free cash flow, right? So overall, growing free cash flow, really like that they're repurchasing shares. That makes you more of a shareholder if you own the company, whether you buy more shares or not whenever that company repurchases its own stock. So overall, numbers look good on this one so far. Let's keep going. Now, another source that I like is stockanalysis.com, and as I mentioned, I always recommend more than one source so that you can back check the information that you're getting is accurate. They're going to give you the same information, financials, statistics. We're looking at the forecast, dividends we'll look at here in a minute, and they have 18 stock analysts that have taken a look at this. They call it a consensus hold. I would tend to agree. Even though dividend yield theory is saying this one is potentially undervalued, I would like a little bit more margin of safety on this one. So I would like it again under 150, closer to this 145 low. And their lowest estimate is $145. Even that would be a 11.98% decrease from where it currently sits. I'd love it back at this range. Average estimate $187.33. That would be a 13.72% increase in the stock price. And that's pretty much in line with what we saw for the estimate from Yahoo Finance on the previous page. And if it happened to hit their high, this would be a new 52-week high, by the way, and that would be a 39.62% increase. All the while, you could collect that 2.8% plus dividend yield this one's paying out. Now, I like to get into the statistics on this one and look at return on invested capital, ROIC, and return on equity, ROE. And you can see here, I like 10% or better for both of these, and this really is smoking. Return on equity, 51%, very, very nice to see. Return on invested capital, 33.5%. So 3 times as high on the return on invested capital, 5 times as high in return on equity than I like to see. Very, very nice numbers on this company overall. And I also like to look at under statistics, EPS growth. I like 5% or better, but this one is close enough at 4.89%. I'm not going to split hairs over fractions of a percent here. 4.89%, really I'm looking for 5% or better, but this is close enough to call it a thumbs up for me. Let's jump over and take a look at the dividends. As we said, low payout ratio on this one, or relatively low. Under 75% is what I'm looking for. This is at 59.54. I think we saw 54 from Yahoo Finance, so split the difference, call it around 55% dividend payout ratio on this one. Again, they may be calculating on different days or not updating their data quite. That's why you want to look at more than one source. But in the 50s, 50% payout ratio range, and dividend growth of 7.83%. Very nice dividend growth on this one. High single digits. Going back to 2020, they were paying on July 30th, 2020, 90 cents. They jumped it up in October 29th of 2020 to $1.02. In October 2021, they jumped it up to $1.15. October 28th, 2022, they jumped it up to $1.24. And I would assume that they are going to jump it up again in their October payout and continue this dividend growth. It'll just be a matter of what that is. Well, this is the Vested Interest Stock Screener. This is also how I set up the videos, right? We look at the business, understand the business. We want growing free cash flow over the last 5 years and expect it into the future. We want a growing dividend. Dividend payout ratio of 75% or less. Does not apply to REITs or BDCs. REITs are required to pay out more, and so are BDCs for tax purposes than 75 or 90%, I believe it is, for REITs. So that 75% doesn't apply just because they have to pay out more than what they're supposed to or what they should be. Check valuation based on dividend yield theory. We looked at that. Buy below current cost basis or within 15% of a 52-week low. Return on invested capital, return on equity equal to or greater than the industry average, or 10% plus. Smoke those numbers. And the earnings per share growth equal or greater than the industry average, or 5% plus. Close enough on this one. Really great numbers overall on this one. I would just like it to pull back a little bit more. Under 150 is where I'd be looking for this one if it was me. If you're interested in it, good one to throw on the watch list. It is on my watch list along with a lot of other companies, but this one overall numbers look very, very good. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here in the Vested Interest community. Join us here on this race to financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I will work it into the rotation. And let me know what you think of Texas Instrument. Is it in your portfolio? Were you an older guy like me who had, maybe one of their calculators back in the day? Is it one on your watch list, or maybe you're avoiding it altogether? Really would love to hear from you. Drop it down below in the comment section. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. Don't forget to tune back in on Sunday morning. We will be putting out our portfolio update, all the stocks that I bought this week, anything I might have sold, any options we were in. You'll see that Sunday morning at 7:30. So again, hit that subscribe button down below and hit that notification bell so you are notified whenever we put out any new videos. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.